right, everyone, welcome to our weekly webinar show, and hopefully everyone's feeling pretty good. I might sound a little bit croaky today. Unfortunately, I flew in pretty late last night. Obviously, we had our first ever FX Evolution conference, and it was pretty good success. Hopefully anyone that's joining us today that was there enjoyed it. It was good time. And yeah, we're back to our regular scheduled programming. So what I'll do today is, because I flew in quite late, we'll do about half an hour and we'll go through what's going on here, and we'll do a special edition for the private community tomorrow as well, after the close show, after we see what the FOMC stuff is going to be. First off, let's talk about this US 100 though. I think it's best to go into the market straight away here. There's a lot going on. I'll just post the link. Let me just post this, share this stuff so that everybody, actually, if you're there, Dave, if you could just chuck it in the Discord room, that would be great. But look, we've seen a big rally here in the last couple of hours, and it has been a fairly decent rally. Do we trust it? Probably can't trust it exactly, but we certainly can be looking at it. So let's have a look here. We'll break it down right now. We'll start off with the breakdown as we hit support. We know 13,000. We've hit it once before. We've hit it again. Comes in pretty bad. I mean, if we're looking at this from a technical perspective, we're talking about at the conference, that's a very nasty candle. Yeah, this is the Friday candle. Then we get the Monday candle testing the low. We get the Tuesday candle bringing it back up, almost re-engulfing backwards. So let's now break it down to a 2 hour and see what it looks like. Okay, so here's the rally. Is that enough? No. Is it breaking past any of the key levels? Absolutely not. Where do you feel better about this if you're a bull? Somewhere around here. So we end up being into these announcements kind of in the middle of nowhere. If we end up rallying to here, this is a very interesting zone. This is where you've got most of your supports, most of your resistances. So I think this is probably one of the key zones that we really want to be looking at, around that 13,750. So to a 13,800. If we get breached past that, we breach past these previous resistances, we've got to start looking for some long positions, especially day trades to 14,250. I think we've got to be aware of that. First time, I'll give you a bit of a hint. First time yesterday, we saw green come out of the bond indicator. So basically bonds telling us, yes, the rally was real from the perspective of the bonds agreed on that day. And what we haven't seen recently has been bonds and the market agreeing for multitudes of days. So there hasn't been that many days in a row that bonds have agreed with everything else. The US 10-year, how are we looking there on US 10-year? So US 10-year sitting at 2.15. Not really the greatest number there. We've also got the US 2-year now sitting at 1.85. It's pretty worrying. And I think it's very difficult to become a huge bull here in a market where the US 10-year and the US 2-year are getting closer, which means potential inversion. And we've also got very high rate level. I mean, we're sitting here talking about 9 rate hikes. That's not that great, is it? 9 rate hikes. So let's see what everybody's saying here in the community. Warren says, hello, Tom. How was the boat? It was excellent. It was good to charter that boat, but obviously the conference was excellent as well. The boat was just a bit of fun. And Edwin says here, welcome back. Thank you very much. Green Thought says, hi, Tom. Hope all's good. Good to see you, mate. Yep, absolutely. And yeah, basically, SD says something about Tom is back, Chihu. Okay, cool. And then you got Nick Schmidt says, Tom, the yield curve has steepens. Yeah, so we'll take a look at that. If you're feeling bullish, I don't know. It's tough to feel bullish, especially when you haven't really got enough technical signals to say go long, or anything like that. There's just one day in many days that have gone through. You can see here when you start bringing the SP 500 where things change a little bit. Obviously, we still got that downward slope. And even if you take the second downward slope, which some people are starting to draw now, they're drawing this, okay, through the high here. Curve fit that a little bit. There you go. So have we gone to a point of bullishness? I don't think so. I think it's just one day in many. If you bought the support, well done. I guess you got lucky in some ways. If you bought the long leg doji into the bull or that little rally there, then I think I can see why you might have rallied it for the day. But yeah, the FOMC this Fed stuff, it all comes down to, can we get through 4,300 on the S&P? If we can, we move towards the 4,400. And if we get past 4,400, well, you've got to start thinking, okay, maybe these shorts are actually over. So that's going to be a big thing. People saying double bottom on the 1 hour. So I wouldn't really necessarily call it a double bottom yet. I mean, we need to breach these levels. Remember, this is a low. This is a low, absolutely. But we got 4,300 resistance. So it's the reason I want to come back and do another one tomorrow is because how's this helping us today? It's really not. This market doesn't help us much. We don't have much confirmation each way. Sometimes we do, sometimes we don't. Unfortunately, in trading, like we said at the conference, not every day is a great day. So if not every day is a great day, then we have to wait until we get more clarity. And today is one of those ones where we're waiting for the clarity. If you bought the bottom, fair enough. It was okay, I guess. You had to go at it. But yeah, let's now look at US 2-year, US 10-year. So I'll just put this in because I don't have the code here on this computer. So US 2Y / US 10Y. If you don't know how to put it in, this will give you whether we're going towards inversion or not. At this point, we're sitting at 0.861. We obviously don't want it over the 1 number. So this is the 1. And generally speaking, yield inversion must stay there for a little while, like not just like half a day and get there. You want it to go up, hold around there, and that usually means there is a recession coming. That's the canary in the coal mine. Now, how long does it usually take for the canary to pop off? Usually 12 to 18 months. Okay, so quite a long time before everything else happens. It can take quite some time. Fernando says, welcome back. Did we expect another leg down after we test resistance? Yeah, I mean, hard to tell. If I was going one direction, I'd be bearish still in the markets if I had my bias on. As I said, the bonds are telling me yesterday's rally was okay. They don't usually go for it. They usually start disagreeing with the market after the second one. We've got the meeting. We've got one of the biggest options expiries of all time this Friday. So I can't go full on bullish yet. I'm still DCA on certain companies, but I think this is the time where you really need to pick what you want for the next couple of months, if not years. So it's going to be very important. Edwin says, Tom, could it be going to 14.2 on the Nasdaq rally till 2:30 PAL time? Then Thursday goes down, retest 13,000, VIX still 30 plus, and not waning. Yeah. So the VIX is 29.84. It's still really high. I mean, we don't know exactly what's going on until the market gives us more clarity. Right now, every one of these markets is still short. It's still short. There's no base. It's still short. There's no base. So it's still really negative. And here's the Dow. It's still technically short until we breach through something like a 34,000. And it doesn't matter which one we pick. IWM. Is that looking like, oh, I love this? It just looks like it's stuck in accumulation. So it's not really the great market that you want to be in, saying, oh, I think it's great. I think it's short. This is probably a neutral market. Dow's probably pretty neutral. No run through after that big rejection candle, and the US 500 and US 100 are still negative overall. Okay, that's how I see it. Tesla got back above 800, but it closed at 800. Really, from the bottom up, is that good? Not really. I mean, you got support, resistance. I mean, it's not a fantastic close. It's just kind of closing right where you expect profit to potentially be taken, and then we wait for the Feds. This is why I want to do another one tomorrow, because no matter what we're looking at here, I mean, some things are looking very deranged. Like copper doesn't look very strong on the charts. Gold, obviously, trading down to 1917. We did put a bit of a warning out for this one. Gold people think of gold as an inflation hedge. Tell you what, it's actually not correlated with inflation hedging much over time. In fact, it's uncorrelated with inflation. Now, there was a period of stagflation where gold did well. And if you believe we're going into stagflation, then there's a potential that gold could be a good investment. But with gold, there's very specific times you want to own it and then times that you don't want to be in it. And we hit our 2070. We certainly put a warning out there. Why I think the market could be going long. Okay, let's just look at the bull case. The only bull case I can think of is oil, palladium, all of these metals. Look at this crash. Palladium back down to where it was before this whole disaster began. Massive blow off, destroyed. Okay, all the way back down. Interesting. US oil, all the way back down. Isn't that interesting how we're now back at the exact same price before all this stuff happened? And what did the media tell us all? Buy oil. Oil to $180. Oil to $300 a barrel. Sound familiar? Does that look parabolic? I feel bad for anyone that's been in this, but remember, we did warn you here. I certainly have been on the warning path of this being absolute crap to be involved in. STV says today was a low volume rally, signals flush. Yeah, I think I don't trust today's rally at this stage. We'll look at Amazon in a minute. We'll look at TAN in a minute as well. A little bit more convincing, somebody said on the SPX chart, where you should be using that. Yep. Well, the levels don't change, but yes, you're right. 4,300, 4,400. Double bottom is what you're talking about. 4,300, incredibly important. You can see that goes through these highs. Absolutely. 43 into 44. 44 will crack the other big channel trend line down. So then you're thinking long. So there you go. Absolutely. All right, let's look through some of the stocks that we've been asked questions about. We'll start off with TAN. Someone said, Tom, do you have TAN? Oh, yeah, I have a portion of TAN. And yes, it did come back down to the level that we've been talking about. Here's the consolidation. Here's the first buy. I don't want it under here anymore. Okay. Not good if it gets under here. TAN has to go now. Volume's dropped a bit. Obviously, had that UN report that pushed it all the way up. Hit that first level of issues. But now we want this thing to rally. So, yeah, that's correct. Let's have a look at Amazon. I was watching the thing on Jeff Bezos and Amazon. I think it was a frontline presentation. Geez, I tell you what, like the problem with all these companies is that, so I don't know if anyone else agrees with this, but AI is going to be the real, let's call it war. Okay. That's the real war. Who gets the first first robot that effectively can control the market or effectively can control all these things that we do in normal workplace. AI is the real battlefield of the next couple of decades. And the problem with something like an Amazon or a Google or an Apple is that if they're not allowed to data mine, how do you win an AI? You have the most data. Because with the most data, you can run the most complex kind of algorithms to get this thing to take off. And I think that the story is, many years ago, there was that DeepMind project from Google. This wasn't where we're at now. We're way further than this. And they already had a robot that was built on general concepts. Okay. And the general concepts were, okay, chess. We give you rules. We give you all the known concepts. What's your IQ? And the robot's IQ was 240 or something. Would beat Magnus Carlsen, would beat the best chess people. Then they gave it the rules of chess and let it play itself. And in 4 hours, this thing not only taught itself every single thing we knew about it from human nature and every single one of the already existing strategies, but then it started creating alien strategies, ones that human concept and human ingenuity would never be able to come up with, because it's completely against what we believe and what we think. So I think that's going to be the scary thing here. And it just brings me into Amazon, because you always think, oh, well, can they break them up? The government. I'm not so sure they can. Okay. So obviously the split here, then we're not talking about that, but yeah, it's just something interesting that I always consider, because one of my biggest problems with these companies has always been, well, when did the government get involved? Will they split these companies and make them into, anti-competitive monopolies? Because at the moment they are. My answer to you is probably not, because of the stakes of the AI game. All right. So yeah, look, we've still got a downward trend. We're bounced off. Obviously, people are looking at Amazon because of the split. I don't think that's a bad idea. It's kind of similar to Google. I mean, if you look over in Google, you've got a nice little base forming on Google as well. I probably prefer the Google trade than the Amazon trade, but both are very very good. Probably need about 3,100 to feel very comfortable with this. XLV. Yeah, looks pretty good. Nice healthcare sector looking very resilient. We expect it to be resilient. It's a good period of time for it. Good seasonality around this period of time. Already a very nice kind of position here. You've got good support that should be able to hold. You'll notice it's been rallying against everything in the market. So yeah, I mean, looks good. Another nice bull day. Get through this pain and should be looking at all-time highs actually. VIX is 30 plus. I don't trust this rally. Absolutely. Any good sectors for tomorrow? I don't like trading into the FOMC very much, but we might have a bit of a look around. I mean, TAN technically held up the sector. I've still been, I said that XLU was good. I mean, it's still chilling and it's doing okay. You can see here utilities still holding the line, kind of flagging almost at the peak with the big pole. So if utilities end up going crazy, that'll be interesting. Some of the utilities companies that have done quite well on the charts. I mean, this is one that's a little bit under, but it's done well in the past. NEE, you can see the TA. These are not going to knock the lights out kind of returns. I mean, they're not hyper stocks or tech, but they certainly are a little bit more defensive. Something we've been looking at. Gold only works on stagflation. It works on other things as well, but stagflation is one thing that it does work at. Let's have a look at Apple. That's a good point. Where did Apple close? Right on previous resistance, previous support, previous support, previous support. Becomes resistance. Interesting level. Put a line in there. Uncertainty is still in this market. Interesting how Apple started to underperform. Hey, that was very strange. Where is Amazon split announced a few days ago? Price remains the same. Yes, that's correct. Well, it went up actually. Went up almost 10% after hours and then opened up only about 4% due to negativity. Hello, Amanda. Hello, Dave. It was great to meet you on the conference. Thank you very much for everything you did. Do you think the markets will try to do a fake out initial rate increase and then reverse Powell speaks? I really don't know. I can't predict it. Some days you know what's going to happen and you think, okay, I have high certainty here. And some days you're looking for the market to give you the signs. Unfortunately, often ahead of news, it becomes blurry and you don't know where it's going to go next and you're just waiting for your trigger. And the trigger comes after the news. That's why I often say, well, maybe we should wait for the news and then trade the rally out of the news. So, I mean, if we carried a double bottom here, S&P 500 goes through 4,300, how much have you really missed? Not that much. It'll look painful, but you break above here, then you might have a nice rally to 44. That next 100 points becomes more clear. Between initial earnings release to guidance, if all of that makes sense. Yeah, well, exactly. It's very similar. So we just want to look. I said this at the conference, and I'll say it again to you guys here. Not every day is a great trade day, but when you get clarity, and especially sometimes you get extreme clarity, then you can really place much better positions. Okay, like we had clarity on gold recently. There was clarity, but if you said to me right now, Tom, what do you think gold's doing? I don't know. I don't know what it's doing. It looks horrible at the moment. Let's have a look at the weekly. Nasty. I mean, look at that. Is that a market I want to be in at the moment? No. Do I think it could turn? Yeah, sure, it could. Do I think it could go down more? I think it could. That's the problem. We lose our clarity. We had clarity up until this point, 2070. If it breached past here, we would have had clarity to some serious numbers. But I knew it probably couldn't do that because all of a sudden we saw interest rates start really hiking. Alex says, thank you. The best way to trade tomorrow is just to stay out until after the dust settles. I appreciate your help, Tom. Yeah, I think it is. I think it is. We have markets here that are kind of in weird areas, like the DAX here sitting around very close to the resistance. The US 500, 4,300 is just in its sights. US 100, we've got that level up here, 13.8. I mean, it seems like a lot of points. But as we know, all of this can change on a dime. Another thing that you could do, and I don't think you're going to get it till after the Fed really talks, frankly. But another thing you could do is sometimes there'll be like a false breakout in the morning and then a rejection. But at this stage, it's still technically sell all the rips because the trend is currently down. So if you're saying where you biased, I'm still biased down. Will that switch if we get a double bottom? I think you'll have to start switching in day trades anyway. Nadir says the market doesn't like uncertainty. If Powell doesn't rug pull, we may have a relief rally. That's correct. I would like to see the Fed stop signaling the market. Now you might say, but Tom, I don't think that's a good idea. Well, the Fed is useless. Most people in this chat would agree. I think everybody probably would agree. You go down the streets of New York right now, you go down the streets of Melbourne, as you call it here, and you say to people, well, should we be sitting with 0.1 interest rate? Okay. I would say 9 in 10 people will answer, no, this is dumb. They'll actually say, no, this is dumb. They don't know about economics. They just know this is not right. Okay. It's not right, they will say. Even though it would affect them to have a higher rate, they would say it's not right. They would say we don't like inflation and this doesn't make any sense. So really, in many ways, the people would be better fed than the Fed. The Fed is useless. They're almost insider trading for rich people. That's kind of the way it is because they take so long to do anything. I mean, we should have had at least 2 rate hikes last year. At least. Minimum. I don't even know what he was looking for anymore at the end. We even have negative interest. Exactly. They pay you to borrow. That's crazy. Talking about Papa Powell, Tom, what is the best case scenario? 0.25 hike and how many times? So I was reading the reports. These are reports that come out of big companies, the big investment houses. And they all seem to think about 4 to 5 extra interest rate hikes this year. So this is 2022. And then around 4 the year after. Okay. So that's 2023. Now, do I believe them? The answer is no, I don't. I never believe them. But this is generally what they're expecting. Okay. So 4 is the absolute expectation. They all expect that. 5 becomes on it. 6 would be crazy. What would be better, and it would create uncertainty in the market, is if the Fed didn't signal any rate hikes. They just said, we're going to do what we need to do. Now, markets hate that. So what would the market do? It would go down. But it would actually create a better moment with being able to combat what is very bad here in inflation. I mean, we have a 2-year rate sitting at 1.85. We have a 10-year rate sitting at 2.15. If this 10-year rate got to 3, or the 2-year rate got to 3, the American government couldn't even really pay back their own debt. It would be a disaster. So, no. I think we should sit out tomorrow if Powell's VIX will be staying up. Well, yeah, the VIX, you just asked the question. Do you feel comfortable in a VIX 30 environment where the market's given you 1 day of rally after many bad days of rally? How many times have you been stuffed over by that concept over here? I will say this. The bonds have agreed more so with this rallies here than with any of this. Okay? Only days bonds set up here, here, and here. And if they keep rallying as well, I'll let you know. But at this stage, no. Finkin79 says, DJ same. It's really bad on the West Coast where I am. And DJ says, I am drowning in inflation. Yes, it's not good. Consumer spending is bad. Like you can see, look at XLY. Is that a great looking chart, guys? Not really. XLY, consumer spending of America, not good. You go look at the stats. Here are some stats. Here's something that's actually terrifying. Did you know that 48%, and this is not actually new either, 48% of Americans have $0 in their bank account? Okay, $0. I think it's another 20% of Americans have less than $1,000. So if you're sitting here watching the stream right now, and whether you're Australian, European, American, whatever, just put that in your mind. If you have over $1,000, you're in a very large, you're in actually a small percentile of the American people. It's very sad. Now, what happened during the pandemic is it swelled. So 48% went much higher because, of course, you had little free money. So you got some free cash. But I showed you a stat the other day. Everyone has spent all their free cash. It's all gone because they needed to live. That's valid. So these are not exact stats, but these are very close. And this is kind of weird. Like you think about XLY, you think about consumer discretionary. How can that do that well? And this is why it's not doing well. After the check and after you got that November number over here, which was, Thanksgiving and the strongest days of trade day, it's just been a downward slope. And in many ways, what XLY is telling us is it's telling us the power of the consumer, third of the American economy, is not currently there. Remember, this is now back to, I'll just say this, it's back to the 5th of January, 2020. Oh, sorry, 2021, or even December 2020. So XLY, very weird. This is not good. Alex says, is there a way of calculating how much each rate hike lowers the market? Usually the calculation is 1% rate hiking, 10% down the S&P 500. I'm not going to tell you that is exactly accurate. That's just generally what people say. That's the normal consensus. Snoozer says free money was blown on GME. Yeah, how is GME doing? Still trading at 82. Amazing. It's even trading at anything. AMC back down to $14, $14.50. Let's just quickly do a scan. I haven't scanned everything because I have been at a conference. So I've just scanned some of the stock I was looking at. Let's have a look here. ARC, still terrible. PLTR. Maybe look there for like a 12-ish, 12.20. SPLK, okay, that's all the way back down to the lows. Wow. A few days of sell-off there. It's pretty brutal. TDOC, whoa, my God, it's so bad. ZS, okay, that's fine. Let's keep going down. Crowd hovering around. Net still down. So there's plenty of opportunity here. That one day of rally is only in the big stocks. You can tell it's only the big stocks. NVIDIA, 7.7%. You know what this is? This is just 100% selection by Wall Street. So at the moment, they're just rotating into high conviction. So what that means is they are going with this idea, which has been the idea actually of the last decade. Winners take all. So think about the last decade of investment in the US. Who were the winners? The big tech. What do? They dominated the market. I was talking about AI before. Where's the money going? The money continues to hold in these big tech stocks. And you might say, but well, okay, Tom, they're holding in the big tech stocks. They're also rotating into other things. Yeah, sure. But if you want to look at all these big tech, look how they have reacted to today's trade. Google. Still holding amazingly well. Still not down that much. Apple, I still think it's overpriced, as you know. Amazon, holding round. Nice split. Thank you very much. Microsoft, one of my favorites, still holding up. These charts don't look anywhere near as bad as some of the others. The hyper stocks look absolutely horrible. So I think this is another couple of years of winners take all. And I've already given you a bit of a consensus on why I think that it's not possible for the US government to split some of these large companies. They need the data for the AI. Fernando says we had good news on the PPI, price to final demand, less foods, energy, and trade services rose 0.2% in February. Well, I think the market also likes the idea that oil has completely dumped itself back to the levels. So you're saying, okay, we have runaway inflation, sure, but then we've just got this mass rally all the way back down to where we were. So you have to say, okay, where were we on the 16th of February in the market? Because that's actually what's happened here. So we go over to SPX. We go to the 16th of February. All right, where are we? Here. So we're at 44.17. So remember, palladium's back. I haven't looked at nickel. I'm assuming has that even reopened, the nickel market? No. So that must be crashed. The nickel market obviously hasn't reopened. But yeah, this is good. I mean, if you don't really want a recession. Some people do, but you don't really want it. It's not a good idea. It's bad. Okay. I used to want recession sometimes. I used to think, oh, wouldn't it be great if the market crashed and then I could have great success in my trades and everything like that. Yeah. Amanda, I'll mod you later. This is a different channel, so obviously you're modded on the other one. So final demand for February 2.4. Tesla did a 6% flop down, 3 up, 3 down, crazy day. Yeah, the market's uncertain. But one thing you can be happy with if you're looking at the market, say you're feeling bullish, which you know it does pay generally to be an optimist. This is good. Back down, okay? Is it 95 good? Probably not. But somewhere in this band would be where I would expect it to be. What you didn't want was $200 oil. If $200 oil happened, oh my goodness, it's going to be bad. So this is better than it could be. Edwin says there are even people saying TDOC, ZM, Net, Piton, Dash. Piton is just the Ab Crunch 2000. The ones that had 70% plus white will never return back in 10 years. Oh yeah, I totally agree. Yeah. Some of them won't. Piton's not coming back. TDOC probably not coming back to that $310. ZM probably not. Net could do it. Green Thought says, Tom, I just realized the VIX has a head and shoulders pattern on the 2-hour chart, neckline 29. VIX. So I assume you like 4 hour or 2 hour, you said 2 hour. Yep. I mean, I kind of see what you're saying. But don't so much look for patterns like that. Just think about it as a support resistance. So what you're saying is head, and then the left shoulder here, even though we've got this crazy spike, and then obviously the right shoulder here. And there's your neckline. I get it. But I wouldn't really too worry about. Remember, patterns are just something that helps you maybe find a take profit. Really, you're reading the psychology of the market. What's happened here? Very interesting stuff. We've had a fairly decent trend line up that has been breached. And then if you actually curve fit a little bit, you can get it correct. It's breached down, rallied up, sold off that area. And now you're looking at this zone here and saying, okay, well, wait a second. If we get underneath this zone as well, has that begun peak, like a big trough, big lower peak, and then a lower trough? We breach through here. All of a sudden, are we seeing the VIX coming back down? Will the VIX be below 25 soon? If it is, and we've got 4,300 plus SPX, do we suddenly say, okay, that was the sell-off? Picking bottoms is hard. We have to get clarity. We don't have it yet. Weird trend line up for the VIX. Yeah, well, I'm not really too technical on the VIX usually. I just look at it and say, okay, it's above 20. I'm going to start scalping and day trading. Yeah. Thoughts on the Chinese stock sell-off? So I haven't really looked at the Chinese stocks too much. Look, is Ray Dalio still over there in these stocks, by the way? Or has he stopped? Because obviously he'd be following his own system concept, which would be being in these stocks. Wow, Barber, $76. 79.12 post market. Oh, that would have hurt people. Wow. That is crazy. And it just shows you what happens when you don't have a government supporting it. Barber is disgusting right now, Dave. 76.76 now to 79.05 because, of course, they're saying, oh, we're going to be delisted, etc. I mean, I just wouldn't own it. If I was to pick one of the emerging markets or one of the big kind of markets, you'd go with India, I think, as an investment. Obviously, you make your own decisions. India's pretty high right now. Like you look at the Nifty 50, but I still think that's the safer market to be in. That would have wiped a lot of people out. Yeah, that was brutal. I didn't want to look at that chart. I remember buying Barber at 200 with a stop loss, obviously, hoping that it was a double bottom. How wrong I was. A week later, the government came in and they said, hey, no. You bought Barber. We don't let that go back up. It's cheap on fundamentals. We don't care. It just shows you that fundamentals mean nothing. Neither does technicals when you have somebody such as the government attacking a business. And in China, the way the rules work like this, if you're medium sized and you don't have too much data, remember it comes back to the AI concept. This is all an AI play, believe me. And whether you're more powerful, medium, you can go up. Large, you're not allowed to be large, so you have to go down. Small, you can go up. So really, I think that the key to that market is be in medium and small businesses, and when they become large, bail. That would be the general concept. Neo 1495, yes. Dubai might be an interesting market. Yeah, we had a member from Dubai fly over for our conference, actually. It was very good to meet him. And we're talking about being a neutral country in the next decade and how that's going to help them. I agree. That's also true, Fernando. It's really just catching up. Remember, they've got a billion plus people. A lot of those are going to catch it. Now that's been allowed to spread. It's unstoppable now. It will cause some economic pain. Most other countries have already gone through that. Even here in Australia, millions of people have had COVID now. But in China, probably we've had more people in Australia have COVID than in China. So there you go. Alex says, if everyone goes bullish tomorrow, double bottom plays out, VIX below 30, would it still be sell the rally environment? No. Not if you get through everything. So at the moment, it's been sell the rally for a bit. But if you have, let's say, bonds coming with you, you get through 4,300. Remember, this is the futures market. So let's look at the real market, actually. SPX. You better have a double bottom 43. And then you're going to be looking at this, something like that as your big teller, 44. So basically, it'd be like a 43 to a 44 is how I'd say it. And if you get through a 44, it's a bull rally. The bulls are back. Bulls win. Bulls super win here. But bulls, I think, are winning much harder here. So you got like the first side, bang, bang, bang. And then it gets through 46 becomes the trade. And as long as the bonds agree, as long as the general market indicators agree, we're in the base. This Friday's crazy. It's quad witching. It's massive options. I cannot give clarity right now on what exactly is happening. I mean, we've had rejection candle, no follow through. A rejection candle, no follow through. Very weird. Almost like a double hanging man. If we get follow through, bring on something like, well, not only 4,000, but probably a 3,800. It's not what we're seeing right now. I don't mean that, DJJ, no. Sell the rumor, buy the news. Yeah. Tommy sounds sick. Yeah. I got in pretty late on the plane, and the aircon might have messed me up a little, but I'm not too bad. I should be fine. Just need a bit of sleep. That's all. All right, everyone. Well, look, I mean, we're in an interesting market. You've got to think that all the big problems inflation-wise, especially, well, when I say the big problems, like, you know, if oil had run away and palladium had run away and every other metal in the world had run away. Let's just actually load up FinViz here for a second. So, you know, if we look at silver, back down, gold, back down, palladium, hovering. Interesting one, whether that's a trade or not. Considering it's, I mean, that actually did have supply problems. Wheat's come back down a lot, which is good. Still, the agricultural food kind of stocks are probably the ones with the most inflation in the moment. Crude's obviously right back down. Natural gas is probably going to become a pretty big thing over the next 5 years, you would think. But you look at all these metals and you say, okay, well, this is much better than it was 2 weeks ago. Can we go bullish now on the markets? They've already put in a sell-off that's probably equivalent to the types of rate hikes that we're getting. You have actually added one extra little bit of bull because not because of how the markets reacted, but just because these are better than they were. Much better than they were. I mean, $130 oil and $95 oil is a big difference, yeah? And especially parabolic. So some of the market has cooled off, which is good. I don't really want these things like $150. It's not very good. Can we do a quick recap of the NDX? So it's at the start. So just Gary, just go straight back to the start recording. I cover it full. Okay, everybody, we will be back. I'll do another one tomorrow for the community, so that will be good. And we'll cover off on some stuff. But yeah, look, the video will be coming very, very soon. Nothing really will change. We'll be back on the schedule. I'll do a video in probably about 3 hours for the normal channel. And we'll do another stream maybe after the stream tomorrow once we find out what's going on with this FOMC stuff. So thanks so much. Crypto market, guys. What can I say? It's just doing its own kind of madness. I mean, IOTX is doing a little bit better than the rest. But in general, all these crypto coins are just sitting. They're not looking so great. And I did post on Twitter, like, I mean, here's the problem. You got long leg doji, you got rejection. Imagine if you get under 37,000. It's not going to be good. All right. I'll see you very soon, everybody, on the main channel. Thank you very much for your support as per usual. Thanks to the 100 people that came out here. If you haven't, subscribe to this channel. Otherwise, we'll see you in the Discord community. And I'll be back now. So there's no real reason that anything should stop going. But the conference was great. And if you're interested, I think we'll probably be coming to America this year. So we'll make an announcement once we've figured out which casino or whatever it is, which event place is going to be the best one for us. It's going to be pretty good. All right. See everybody. Bye for now.